Welcome to the Real Estate Agent Market Update and Mindset Podcast. I'm your host, Angie Gerber, and every Monday you will get a snapshot of what you need to know about the real estate market in real time. And Thursday's episode will focus on your mindset and leveling up in your real estate business because let's face it, business problems are solvable. It's all the other personal crap that we drag into our businesses that keep us stuck. So let's get to it. Thanks so much, everyone, for joining us today. And I'll let Nikki get right to it.
Well, good morning, everyone. I'm so happy to hop on these calls now because I'm seeing some consistent good news come out of interest rates. So I'm super happy to be able to come on these calls and report some really good news for a change. So the big thing last week is that we had quite a huge improvement in interest rates on Thursday going into Friday, which is good news. We are now solidly in the mid sixes, which is a really good opportunity for a lot of clients who were looking at interest rates of the low sevens, in early last week, and now they're into the mid sixes for 30-year conventional loans. Great news. And we're hoping to see that continue to move in the right direction. This week, what we're going to be getting is inflation data. So this will come in with your core PCE and your consumer price index. So those two factors, as they go up and down, that's kind of what the Fed uses as a reading for inflation. What we're expecting is that the headline inflation goes from 2.6 to 2.5, and that the core reading goes from 2.8 to either 2.7 or 2.6. This means a decrease in inflation, which is wonderful for mortgage interest rates and wonderful for the bond market. So that's what we're expecting. Those readings come in on Friday. We're also going to get some home sales numbers this week. We're getting housing pricing index and all the different data that we use on a month-to-month basis to really help determine where that bond market is going to sit. If we can get some good favorable news on Friday from an inflation standpoint, we should see some good improvement on interest rates as well, simply because if we see that inflation come down and that bond market can come down past what we call the 100-day level, which is like what we call a Fibonacci level, that means that we have a lot of room to go even further, even down even further without the market being too much of an effect to it. So that's what we're hopeful for this week. So we'll kind of wait and see what's going on there. I was kind of thinking about what to talk about as far as, in the streets and from a mortgage specific perspective. So I wanted to give a little relativity to, as I talk about these interest rates going up and down, what does that mean from a cost to your borrower? Like if interest rates go down a quarter, what does that mean? How does that improve their monthly payment? And what does this actually mean for them? So a couple of rules that I tend to live by, especially right now in the rate market, is from a down payment perspective, for every $1,000 that the client puts down on the home, that reduces their payment about $6. So for every $10,000, that's a $60 a month reduction in payment. Now, of course, these are just roundabout numbers that we use from an averages standpoint. But it is a good general rule of thumb and usually works out to about that way within a couple dollars. So that's always good to know. So when your client is deciding, is this home too high for me from a price point? If they're looking at 450 and the home is priced at 460, yeah, that's $60 a month. Do they think that they can do that? Does that work within their budget? The other important rule of thumb that I'd like to talk about is interest rate. So with interest rates, as they're going up and down, a 0.25% improvement in interest rate generally on about a $350,000 to $400,000 loan, a 0.25% improvement is about $60 as well, $60 to $64, depending on loan amount. So a good rule of thumb is 0.25%. And every $1,000 or a 0.25% and $10,000 is a $60 difference in payment as a general rule of thumb. So you're going to have obviously dollar differences here and there based on loan amount and such, but it's always good to have that as a rule of thumb as you're kind of meeting and you're deciding on price point and budget comfort and things of that nature. The other option you can do is reach out to me. I can always run numbers and say, okay, if we purchase this home at 460, 470, 480, 490, what does that look like? So they can see the actual real numbers based on their situation. So just some things to keep in mind as you're talking about, what are interest rates doing? Are they going up or down? How is that payment affecting them from a monthly standpoint? Because at the end of the day, that's really what's most important to clients is what's my monthly payment going to be and how much is this home going to cost me every month?
Yeah, and I think it's important. So then you have that idea. And even again, it's a baseline to talk to and talk from. Always give that caveat that they'll want to talk to Nikki just to run the numbers because it is variable, but it definitely is something again I talk about. And Nikki does such a great job. Show up and educate. So anyone that's on this call or listening to this recording, take that information that you just heard and go to social media with it and educate your sphere, your past clients, people that know you, like you, trust you. It might not be them right now, but I imagine of the 250 to 600 people on average that they know, we all know that many people, maybe one of them's thinking. So be the educator for sure. And I just want to open it up to anyone on here that has a question for Nikki or myself. I know that there's 8 live here, so I just want to check in with you all. Unmute yourself. Feel free to if you have anything that you want to go over. All right. If not, Nikki, what I was thinking about as you were talking that I would love for you to just touch base on, and I know a few months back I brought it up a couple times, but it goes along with the conversation today. So can you go back and talk about when the rate does adjust a quarter? What happens with buyers like that enter the market, or what does that look like as we're going into the spring market and people are still waiting? I'd love to have that conversation again.
You mean about like when interest rates start to below, and really what it does is it creates more competition in the market.
Mhm.
So it creates more competition from a price standpoint, from the number of buyers that can enter into your price point. And I want
Mhm.
to say, I remember the statistic for every 0.25% drop in interest rate, or no, I'm sorry, for every 1% drop in interest rate, there's 5 million new buyers that are eligible to purchase in the same price point as you. So it's really kind of a kind of a number that you can go, whoa, that's a lot of, competition that enters into the market as these interest rates go down. I also saw something very interesting that was talking about like in 1973, mortgage interest rates were about 7.75% on 30-year fixed. And if those people in 1973 waited for interest rates to drop before they bought a home, they would have been waiting till 1993. And so you sit there and you go, okay, so they would have had 20 years of paying, these on this mortgage that they could have had at the 7 point whatever interest rate until mortgage interest rates drop. So waiting until mortgage interest rates drop isn't always the answer. Yes, we feel like it's going to be 12 to 18 months, but we felt like it was going to be 12 to 18 months, 12 to 18 months ago. And yes, it has improved since that time. I would say probably about 0.5% to 0.75%, depending on, what month you look at, et cetera. But we haven't seen the improvement of 2 or 3% points like people were expecting. And so as we continue to move into this year and continue on with this year, it's one of those things where, yes, are we seeing some improvement? Absolutely. But are we going to see the significant improvement that we want to see in 12 to 18 months? We're, entirely expecting it, but not incredibly sure of it. I mean, many things could happen. And with, a lot of things changing from an economic standpoint right now, we're in uncharted waters and uncharted territories in a lot of ways, because a lot of these different economic structures and things like that haven't put pressure on mortgage interest rates in the past like they are going to be here in the future. So if there are buyers that are on the fence, my biggest piece of encouragement, lock in the interest rate. Worst case scenario, things get better and you refinance into a lower interest rate. I mean, that's the worst thing that could happen, but otherwise you're locked in and your housing payment is stable.
That's what I was just going to bring up too, is how just bringing it back to the conversation of rates and not necessarily waiting and moving now. Is there any conversations or any direction you can give us on the call or those listening to the recording about how to have those conversations? I know for a while the tagline was marry the home, date the rate. We can
Mhm.
refinance. And I know even with you, Nikki, you had some different tools and programs in different ways to plan for that happening. Is that still the case, or can you educate some of the people that
Sure.
are new to this call?
Yeah. So what a lot of times we talk about with clients is, yes, we talk about interest rate, but we don't talk about it as the whole story. Yes, we talk about monthly budget, but we don't talk about that as the whole story either. What we really focus on is the strategy of buying. And what I mean by that is everybody's situation is different, right? So you have clients who are first-time home buyers that are putting their life savings into down payments and closing costs. That's one situation that needs to be strategized completely differently than a third-time home buyer buying a new construction home with 20% down. So we really have to concentrate on what is the strategy behind buying. Because when we think about monthly payment, for an example, what are those things that are going to happen over the next 5 years that can affect monthly payment? Your tax cost and your insurance cost. What are the significant life events that you have that you know of coming up in the next 5 years? Kids graduating college, someone's getting married, you're potentially having children or grandchildren, things that are going to affect your outside life budget that are going to influence how and why you would buy a property. And yes, feeling the home, loving it, falling in love with it, making it a home are all important things. Those things also cost money as well. So knowing that we have to kind of take all of those tidbits and strategize on how to buy a home financially smart from a financial perspective and also have it fit into your life events, your daily life, your furniture, your home, your, use and enjoyment of the property, use and enjoyment of travel time, things of that nature that are important to each person. And that's where getting that personal information from them is going to be extremely important because the house can be a completely business transaction from a financial perspective only, but that relationship is what's going to make it feel like a strategy, a holistic strategy in a home and feel like you're bringing value to them. And so really what that strategy is what we focus on when we're talking to clients about what is their budget and how do they want to buy.
Oh my gosh, I love that. So we're strategists. So what
We
would that
are.
look like to you if you went to market or went to your social media and let's strategize? I'll come alongside you, consultant, strategist. I mean, it's true. And everyone's story is different. And if you take out just buying a home, I will help you buy, sell, or invest in real estate. What would it look like if you open that up and you were like, oh, well, what are your goals? Not only real estate goals, but your goals, dreams, desires, lifestyle. Like, what do you want this to look like? What are they today? What are they going to be in a year, in 5 years? And then you can take that holistic approach and really show up. That's kind of what came to mind as you were talking, Nikki. I love it.
Yeah. And it could be something that, keep in mind that that strategy could center around purely the idea of something super simple. I want a pool. Super simple request. They want a pool. Okay, great. Awesome. What does that look like from a monthly cost standpoint? What does that look like for maintenance? Do you want a heated pool? That's going to affect your electricity bill. All these different things that you can talk about from a financial perspective and saying, okay, what they desire a pool, but what do they really desire? Private area, family over, entertaining, and really getting to the core of how they feel about that pool versus what's the financial aspect. And if you can meld those two together, that's where that value is going to come in. And that's just one example, of course.
Yeah, love it. Absolutely. So great. So great. Anyone have any questions? We're at the 15-minute point. So I promise to keep it to the point and short so you guys continue to get value and show up. But open it up. We're here for questions.
So
All
based
right.
on hello,
Yep.
Yes, go ahead, Aminata.
hi everybody. Based on the strategy you just gave, I want a pool. How about if it's I want a garage? What are your tips on that? I want three garage. They have two, but they want three.
Yep. So the question would be why? What do you need three? What's your reasoning? How do you feel about having three cars? What would the third car garage be for? So let's just say someone says, well, I want a third stall garage because I want to have a garage space or a man cave or whatever they want to call it. Well, are there options for a an extended two-car garage? Or are there options for a tandem garage? Or are there options for a, she shed or something else that could be part of a property or part of a different style of property, depending on what that need is for that third stall? So we were actually just talking about this beautiful property that we had seen over the weekend because we're obsessed with real estate and love going and looking at houses. But we had seen this beautiful home, but it had a 2-car garage, and we're like, gosh, that home would be so cool if it had a third stall. And what we figured out is that the reason that that home would be so cool with a third stall is because the community that it was in was a community that uses golf carts to go around the entire community, all those things. And it's like as a buyer of that home, it would make sense that you would really want some sort of place to put that golf cart. So that's just one way of talking about a third car garage and say, okay, what's that going to be used for? And if it has to be a third car garage, great, awesome, because you need it for a physical car, that's one thing. Or could it be a concrete pad? Could it be something that you could do after the fact that doesn't jump your price point entirely? Does that make sense?
Yeah, it makes sense, and I already know the why. So, okay. It's just challenging to find something at that price range.
Yeah.
Mhm. Yeah. So then maybe what would it look like, and anyone chime in with other ideas for Aminata, but getting and talking with a contractor and just kind of getting the most recent bids or what this looks like, or on this average size, home or lot, or adding a stall will run X amount of dollars, so that you can kind of give that value and show or connect them with, 2 or 3 local people that could have that contractors that can have that conversation at a really high level, and again, help them. Maybe it's outside of purchasing the home, they purchase the home and then they go over here and they figure out different avenues, financing options on adding that third stall or she shed or man cave or whatever it looks like.
Thank you so much. Is it okay if I clarify this quick?
Sure.
So I've been a little bit confused. Okay, so this person for the garage, they have a townhome with 2 garage and they want 3 because it's 3 adults, their wife and husband and wife and a son. But Michael, okay, so when you sell in a house and you want to buy another house, do you still need a lender? I thought you need a lender, but I'm not sure now.
Yes, you still need a lender for the new home purchase.
Okay.
Mm-hmm.
Okay. Thank you.
Unless they're paying cash for the new home.
Okay, thanks.
Yep.
Anyone else have any questions before we wrap up today? All right, everyone. Well, as usual, thank you so much for joining. If you want to watch the replay and catch the beginning of the call, if you didn't catch it, go to my YouTube channel or podcast or social media. I'll put it all 3 places. It's a great call as usual. So thank you, Nikki. Thank you, everyone. And as you know, Nikki and I are here in between calls for help in any way. Thanks for joining us today. And be sure to check out my ebook, From Hustle to Harmony for Real Estate Agents, on my Stan store, stan.store/Angie Gerber. And until next time, remember, nothing changes if nothing changes. Now go sell something.